The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
There is a deluge of earnings figures out today. Hard to choose which one to add for Stock of the Day, but a darling of the market and a stock that is probably overweight in most private investors' portfolio is CSL. So I thought we'd take a look at that today. The blood plasma pharmaceuticals vaccine conglomerate, global conglomerate, has posted a 20% rise in full-year profit, underpinned by strong performance in its key blood plasma business. Net profit came in at $2.64 billion. CSL forecasting earnings to rise 10 to 13% in FY25. Shareholders will receive a final dividend, $1.45 a share US, taking the full-year dividend to $2.64. That's up 12%. Stock down 4% on that result. Rudy, CSL sort of dropped down to what, $230 in the last 12 months, has now not my water over, has now recovered to about 300, and has been in a downgrade cycle. It's a turnaround, but the market's played it down.
Well, it's I feel a little bit like Belgium at the Olympics. You go to you get to the finals and you become fourth.
Right.
So of course, bronze, silver, and gold would have been better, but fourth is not bad.
Right.
In the bigger scheme of things. And as Meatloaf has once told us, 2 out of 3 ain't bad.
Right.
Reporting season, I mean, I think in a broader sense, I think it's time to be a little bit more cautious, I think, if we aren't already as investors, because if you look at today and the past 10 days or so we've had in reporting results, the ledger is quite extreme. Many companies miss, and there's equally the same amount of companies that beat or meet expectations. But I think in reporting season, it's predominantly the ones that miss that gets everyone's attention, of course, because the share price response tends to be so much larger.
Yep.
And today we have, for those who are not sitting behind their screen, today we have the likes of Netwealth and Seek, and also CSL, of course, that go down after reporting their results. I had a quick look this morning. I have the privilege of seeing the initial responses from a whole slew of analysts covering this stock. 24, the numbers look okay. 25 is a little bit below expectations.
Yeah.
Higher costs, and that Swiss acquisition they did, Vifor, that tends to come out with not quite what the market is expecting now for the second or third time. But I think in general terms, the margin improvement is on its way. Not in the same extent as with ResMed, unfortunately. This is a much more complex business and much larger. Yep. But I think when companies like CSL, when they go down on results, more often than not, that's actually not to be quiet upon because you own the shares. It's more of an opportunity to get on board, I think.
Okay.
And that doesn't only go for CSL, that goes for a lot of the other quality companies we have as well. I think the main thing is they're growing still in double digits. They will do double digits for years to come. Yeah. Sometimes that's not quite what the market is expecting. I mean, they have Forex headwinds. They have, of course, quite a complex business, and they've acquired that Swiss business for a lot of money. And that, in all honesty, hasn't lived up to expectations to date. But it's a big call to make that it will never live up to expectations from here onwards, and that they will not reach that double-digit growth pace year in, year out. So I think it's, yes, of course, on the day, it's neither gold, silver, or bronze, but it's still double-digit growth ahead. And the share price is no longer.
So what would you be doing? Would you be buying at these levels?
Well, I already own a lot of shares in CSL.
Like most of us.
you win. It's easy to say you always buy it, but the thing is, what I do is I'll have a long-term view.
Yeah.
And I've had CSL for such a long time, and I'm still confident that the share price will over time will just trend higher.
Okay, Ian, can we bring up that 5-year chart again of CSL? Because there is a view that CSL share price gets to that $3.10 level. Everyone says, okay, it's building a foundation for the next leap up. It never does.
Well, never is a big call.
We're talking full back to 230 last October.
We're talking about a healthcare bear market post-COVID, and that has so far been a lid on the share price. But it won't be there forever. That's a guarantee. And I'm actually not sure whether it actually went to 230.
Oh, there we go. In October. $230, $60.
There you go. Well, you should definitely be buying back then.
And then over the previous years, it's pulled back to 250 on a couple of occasions as well.
I think if you exclude the extremes, I think in general terms, the share price was trending around the $270, $280.
Yeah.
It's now just under the 300, has been a little bit above it.
Yeah.
I think there is your message. The market is getting more confident that the margin will increase from here onwards, and that bearing, which essentially is still the core business, that they will continue to grow at double digits with higher margins.
Right. So to have a hold on CSL?
No. I think depending on your horizon view, I think you can buy it here.
You buy it, okay. Yeah. All right. See, there we go. There's the 5-year chart. Gets down to that 250 virtually every year or below. You just wait for it.
Well, it's a big call to make that it will get there this time. I wouldn't be making that call.
Okay. Richard?
Yeah.
Ben.
Yeah. Two first names. It's an easy mistake to make there. But look, I think the 5-year chart's really interesting there. I think it probably got a bit ahead of itself. In 2020, it was trading on a PE in the 40s from memory, and it's just taken a couple of years to kind of grow back into that valuation. In terms of the result, I tend to agree with Rudy. He's probably the CSL guru, knows it inside out. But look, I think the key takeaway from our perspective is that the core business is back to its best. That's the bearing immunoglobulin business. It is expanding margins and volumes again, which is has been the key issue for analysts over the last couple of years. And yeah, I think although it's down a few percent today on, a 3 to 4% miss on the FY25 outlook for net profit, look, I think that's pretty harsh as well. If you take a long-term view, as Rudy said, then on 28 times PE today, we think it's a buy. We own it. It's probably a bit more underweight relative to the index, but I think it's a really strong growth company that, in a negative healthcare market sentiment, can be an opportunity.
Okay. All right. So you'd buy at these levels as well?
Yeah, I think it's a buy.
Okay. All right. That's CSL, our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.